Good morning. This is Business Morning. Thank you for joining us, and happy Good Friday.
Happy Good Friday. I'm Ladi Williams. Thank you for joining us. Let's start off with the news. The Organization of Petroleum Exporting Countries and its allies yesterday agreed to increase oil production gradually in the coming months, making a cautious bet on a summer economic rebound as the world recovers from the COVID-19 pandemic. Defying market expectations for the second time in less than a month, the group agreed to add more than 2 million barrels a day to global oil supplies from May to July. That will return about a quarter of the crude they are still withholding after making deep cuts a year ago in response to the pandemic. With oil prices firmly above $60 a barrel, the Organization of Petroleum Exporting Countries and its allies have been under pressure to provide more fuel to an accelerating global economy. Other commodity costs have also been soaring, leaving central banks from the U.S. to China grappling with the potential of higher inflation, just as their governments are pouring trillions of dollars into fiscal stimulus.
Meanwhile, the global oil market is on holiday today to mark the Good Friday, but prices jumped higher on Thursday following the announcement by OPEC and its allies of a gradual increase in crude production starting next month. Brent crude for June delivery climbed by 2.93% to $64.68 a barrel, while U.S. West Texas Intermediate surged by 3.33% to $61.26 a barrel. The OPEC Plus alliance is currently cutting crude oil production by just over 7 million barrels per day in an attempt to prop up prices and reduce oversupplies.
And ahead of the meeting, OPEC Secretary General Mohammed Bakindo stressed the need to remain very cautious as a result of ongoing uncertainties and fragility caused by the coronavirus pandemic. Similarly, Saudi Arabia has previously encouraged allied partners to remain extremely cautious on production policy, warning the group against complacency as it seeks to ensure a full oil market recovery. Do take a listen.
It has proven to be a prescient decision. The declaration of cooperation and the steadfastness to conformity and compensation from participants has been central to the recovery of the industry that is such a vital cog in oil in the global economy. Your Highness, we need to continue on this path, be guided by the data and analysis, review the outlook on a regular basis, and take things one step at a time. The cautious and careful approach has proven effective thus far, as can be viewed in the decision taken at the 14th ministerial meeting. The decision to approve a continuation of the production adjustment levels of March 2020 into April was judicious, particularly given the market volatility we all witnessed in the last 2 weeks of March, with significant market sell-offs and crude futures flipping into contango. This was driven by a combination of rising coronavirus cases and new variants, as you just mentioned, further lockdowns in Europe, concerns over softening oil demand, and generally more fragility in the outlook. Crude futures, however, did move back into backwardation following the longer than expected blockage of the Suez Canal. So allow me to provide you with a few highlights and shifting trends to focus since we met last at the beginning of March. Last month, we saw global economic growth in 2021 at 4.8%, if you recall, but expectations are now higher at 5.1%, as mentioned by Alexander Novak. The additional U.S. stimulus measures are a major driver in this upward impetus, but our recent scenario analysis suggests that this slight uptick may need to be revised given the many uncertainties and fragility elsewhere. Global oil demand in 2021 is slightly lower at about 5.6 million barrels a day. We also need to remember, Your Highness, that demand contracted by a whopping 9.6 million barrels a day in 2020. So a return to 2019 levels is not expected before 2022. On the demand front, we continue to see a divergence between the first and the second half of 2021. The first half has again been adjusted lower, primarily on the back of extended measures and new lockdowns in many key parts of Europe, as mentioned by the president of the OPEC conference, Pedro Azevedo. Oil demand growth in the second half, however, remains intact. This reflects prospects for a stronger economic recovery with the positive impact of further vaccination rollouts. What the economic and demand outlook are showing us is that we need to be watchful and tread a prudent path. There remains many impediments and potential obstacles to the recovery.
Mohamed Bakindo is the Secretary General of OPEC. In the meantime, while oil price trading higher, currently at $64 per barrel, achieving macroeconomic stability remains a major challenge for the Nigerian government. The country just recently managed to come out of recession. However, macroeconomic indicators are still looking bearish. Inflation numbers are galloping, the currency continues to depreciate, and unemployment rate remains elevated. In the quest to achieve macroeconomic stability, the question many have asked is, where is the role of corporate Nigerians? Now, to have this conversation with us and, of course, react to the outcome of the OPEC Plus meeting is the CEO of Financial Derivatives Company, Mr. Bismarck Rwani. Thank you very much, Mr. Rwani, for being on the show with us.
Good to have you, sir.
Good morning.
Good morning. Well, let's start with the latest OPEC decision to relax their production cut. That's despite revising their oil demand, global oil demand. That was just before the meeting. Are you as surprised as other market analysts?
Not really. Well, let's understand the structure of the oil markets. One is an oligopoly, meaning that there are few suppliers and many buyers. Usually the bargaining power is in the hands of the suppliers. How do they do this? They control output, and by so doing, they actually maintain price stability. So what's the situation we have? World oil production is about 92 million barrels. OPEC has only about 35% of total production. So they're not in a strong position. They have now allied with Russia to have what they call the OPEC Plus. So what have they done? Saudi Arabia, as a swing producer and price leader, is producing about 8 to 9 million barrels a day. And so vulnerable countries like Nigeria and Iran, Venezuela, Nigeria is not exempt from production cuts, but Iran and Venezuela are exempted. So what are we going to see? And what you've seen now is that the global demand gap is about 800,000 barrels. And they are systematically and slowly bringing back the 1 million barrels, which is actually 6 million barrels below the total balance. So what you're seeing actually is that the producers are taking a cut in production to keep price higher. And that helps countries like Nigeria. But having said that, we have to ask ourselves, today the price is $64 a barrel, and our production is about 1.45 million barrels a day. We can get by with that, but definitely there's work to be done. And I want you to understand something. As a fringe player, we have a population of 200 million, and we are producing 1.5 million barrels. Saudi Arabia has a population of 32 million people, and they are producing normally 12 million barrels. Now they are down to 8 million barrels. So if you take barrels per head, we are nowhere near any of these countries.
Okay, Mr. Ron, but with this, what are we likely to see in the oil markets in the short to medium term, and as regards price level, and what will it mean for Nigeria?
Well, first of all, oil markets are volatile. Commodity markets are also very volatile. They are political as well as geopolitical and other economic considerations that determine the price. For Nigeria, we are always happy. Our break-even point, fiscal break-even point, is something like 60 to 70 million barrels, $60 to $70 million, $70 a barrel. That means we break even, and we are what we call a fiscally neutral rate of production. But we are producing 1.4, we are at $60, we are minimizing our deficit, as it were. Now, what it does mean is that the naira, and the question is, what happens to the naira? What happens to our external reserves? What happens to our revenues? Generally speaking, at this time last year, the price of oil had dropped to $30 a barrel. Now we are 60, we are 100% higher than what it was. So we are in a better place, but not where we want to be.
Now, okay, let's look at this. Some analysts and policy makers have blamed the weakness of the naira and the drop of oil. That was what we saw in 2020. Now, the price of oil has increased by about 35% in 2021, yeah, but the naira has fallen some more in both the I&E window, which is currently at $400, and then the parallel market is now 486 naira per dollar. Now, just before the pandemic, the naira traded at 360 naira to the dollar. That was in the parallel market. That was in February. And then the price of Brent fell to about $30 per barrel, briefly. Now, the price of oil trading around the 60, 64 barrels per day that we're seeing, 200% higher than the record low. And yet, the naira has not recovered. Is this case a case that the naira falls when the price of oil falls, or vice versa?
No, I think it's a paradox that when the price of oil fell, the naira fell. When the price of oil increased by 200%, the naira fell some more. So is there a correlation between the price of oil and the value of the naira? Definitely there is, but it tells you that it may not be a revenue problem, but a management problem. Because there's no reason why when the oil price was $30 a barrel, you traded at 368. Now it's twice that, 3 times that amount. That is, it's now 60. So twice that amount. And yet the naira is at 486. So what's going on here? Policymakers make excuses that the reason why things are bad is because the price of oil has fallen. Now that the price of oil has increased, what's the excuse for not performing? So
the naira is still falling.
Absolutely. So there's something much more fundamental. The laws of gravity seem to be defied, as far as I know.
But would you say maybe the government profits somehow from devaluing the naira?
In nominal terms, yes. There's what we call money illusion, because you are getting more naira per dollar, right? But that naira can buy only so much, right? But technically speaking, when we now look at how government finances have been performing, in spite of the recession, in spite of the contraction in economic activity, government revenues actually increased to a large extent. Why? Because of that illusionary, right, the adjustment of the currency, which gives you more naira per dollar. But when you go to the market, international market, to buy that naira, that illusion fades away, and you actually have to trade with the dollar or maybe with your Bitcoin.
That's Maladi. Anyway, that brings us to the issue of achieving macroeconomic stability and, of course, the role of a corporate Nigeria. I mean, we've seen inflation number gallop, we've seen unemployment rate continue to rise, and then we've seen the naira, of course, not stable at all. And so, a lot of people believe that some Nigerian companies seem to remain aloof when it comes to, growth and stability. Do you agree with that?
To a limited extent, I do. But this is what we call a fiscally dominant economy. In other words, government's role is so dominant that you can't do anything without government. And is that a good thing? No, it's not a good thing. Because it makes business subject to the whims and caprices of political manipulation. So we have the electoral cycle, we have everything. So even when there are very important issues, all you will hear about is 2023 rather than what we're dealing with in 2021. But having said that, you have to ask yourself, what is the size of the Nigerian stock market? It's 20 trillion naira. What is the size of the Nigerian economy? It's 155 trillion naira. At best, you are 10% or 15% of the Nigerian economy is the stock market capitalization. Can corporates do more? The corporates can do more because basically, in the end, the investment multiplier is all about, because you increase investment by X, you get a multiple effect of X multiplied by the multiplier. And so we need that. And when we get to talk about what the corporates are doing, the corporates are aloof because you don't want to put your head out there and they are not the policies are not consistent. So people are very cautious. But as time goes on, you begin to see that corporates will have to participate, because in the end, it's not the government that will suffer. Everybody will suffer. When night becomes day or day becomes night, everybody's house is covered.
Exactly. Well, aggregate expenditure on the budget has increased from 7.3 trillion in 2017 every year and consistently to over 13 trillion in 2021. The government has not laid off any employees in spite of 2 recessions. In the corporate world, we've seen layoffs, redundancies, and force majeures. Are corporate bodies really playing their expected role in the bid to achieving and maintaining macroeconomic stability?
Yes, they are. What corporates have to do is to pay their taxes, pay their dividends, employ people, ensure that they do business. But when we had the COVID lockdown and COVID, the palliatives from the government were significantly higher than the palliatives from the private sector. The government also, because of the deficit, the government drew down under the IMF facility, borrowed some more money from the World Bank to make sure that the economy didn't crash completely. Yes, we went down to -6 in the second quarter of 2020, but then there's been this slight recovery. So to answer your question, yes, the private sector also contributed some palliatives, but unfortunately the palliatives were kept in warehouses, which, as you know, what happened in Hensas.
Looting.
So palliatives that are in warehouses do not do anything for the people that are in the houses. I think that's the first thing we have to understand.
True.
So again, it comes back to the question, do we have a revenue problem? Yes, but we have more of a management problem. That's why the palliatives are there. That's why you are struggling to get your national identity, what do you call it, NIN.
NIN.
That's why you can't, you can see it. It's glaring for everybody to see that there's a management problem in Nigeria. So if you don't solve the management, I don't care even if you quadruple the revenue, you will not get the outcome because the management is bad. If you can't manage 1 naira, you can't manage 1 billion.
There's a spending problem.
Yeah, well, there's spending, but management. If I give you 100 naira today and you can't manage it, even if I give you 100,000 naira tomorrow, you will mismanage it as well. So you've got to learn how to manage it with the small numbers before we challenge you with the bigger numbers.
Right, you talked about taxation there. Now, looking at the total taxes collected by the FIRS in 2020, that's about 4.95 trillion naira, or about 2.89% of GDP. Now, the tax to GDP ratio in Nigeria is approximately 5%, and this includes state taxes, VAT, and so on. Then, IMF would always say that this is low when compared with South Africa, with a ratio of 28.6%. So what do you think can be done to address this low?
Okay, first and foremost, you pay taxes on profits. So companies have to be profitable. To be profitable, they have to trade profitably. They have to have foreign exchange at market rates. They have to have raw materials. They have to be able to carry their goods to the market without being, harassed and without herdsmen or whatever, logistics problem and security problem. So all of these things put together give you what we can call the return on capital. Now, but if you look at it, total taxes paid, corporate income taxes, total taxes collected were about 5 trillion, but total taxes paid by corporates were about 1.41 trillion, in spite of the recession. Earlier we paid, the year before we paid 1.63 trillion. But if you look at the tax collected, right, you'll find that the top 5% of companies probably pay infinitely more taxes than the bottom of the pyramid. In any case, they make the bulk of the profit. So, like they say, many are called, few are chosen. Unto him who has more shall be given, and unto him who has none.
Mr. Rani, I want you to hold your thoughts there, because it will be interesting to get to know exactly what these corporates, some of these corporates, perhaps the big ones, what they really pay in taxes, if we can really track that. So we'll continue with this conversation. Mr. Rwani is still here with us. And of course, we would also do a quick review of the fixed income market after the break. Do stay with us. Thank you for staying tuned. You're still watching Business Morning on Channels Television, where we're still looking at the role of corporate Nigerians in achieving macroeconomic stability. And we'll still have here the CEO of Financial Derivatives Company, Mr. Bismarck Ruwane. Thank you very much, Mr. Ruwane, for sticking on.
Thank you.
Yes, we're talking about the low tax ratio of Nigeria, but it's important to know what some of these top companies actually pay in taxes. You did mention that they pay a lot of, taxes. What are these companies? Who are these companies that pay these taxes? And if they have to pay so much in taxes, and then we are not even seeing what the government, the impact of it, should it be a case of where perhaps they don't have to pay this much and then channel it into infrastructure development as a private sector?
Okay, let me take, first and foremost, total taxes paid by corporates in Nigeria was 1.4 trillion. But the top 5 companies by market capitalization on the stock exchange themselves paid 302 billion. In other words, they paid about 22% of the total taxes, 5. That's why I say many are called, few are chosen. Now, but let us look at these companies. The highest paying tax body in this country, corporate, was Dangote Cement. They paid 97 billion naira. It was followed by MTN, which paid 93 billion naira. Airtel Africa paid 83 billion naira. Nestle paid 21.4, and BUA paid 6.53 billion naira. Of course, remember, you paid taxes on profits earned, and after writing your allowances and, capital allowances, right? So that's what happens, But essentially, these guys, but it's not only tax they pay, but they paid all 302 billion naira. And for you to understand it, the total budget of Osun State, for example, for the year is 50 billion naira, right? And that's what they get, that's the total allocation they get, 50 billion naira. This company, Dangote alone, pays tax twice the total value of what Osun State gets for the year. So I just want you to imagine what it is. You raised a point about how much paying tax is one thing, but how much value did people get? What are the proceeds of tax? Yes, again, it comes back to the management problem. But let us understand something. There's this new concept of tax for asset conversion. The Dangote Group actually had tax for road conversion, right? So you're not only, because if I pay tax and the money is stolen, if I pay tax and the money leaks, then people don't get anything. But if I convert my tax, part of my tax, into an asset, the people can feel the impact, especially if it's a critical social infrastructure. The question now is, how do you value it, right? So, but it actually mitigates the risk of diversion, and the people can feel it. So if I say I'm going to fix the 4th mainland bridge with taxes rather than wait for taxes to be paid and contractors to be paid and kickbacks and all of that, you may get that particular. So a tax for asset conversion program can be useful, but it also can be abused by unscrupulous people. So
but you're a member of the advisory council, so perhaps you can advise the government to look at this means of developing infrastructure.
You see, we don't advise on television. We advise in camera.
I'm just saying.
All right.
So in this context, how would you explain how much corporate social responsibility activities of some of these companies in impacting the less privileged and the bottom of the economic pyramid in Nigeria?
Yeah, very good point. The thing is that it's not just taxes they pay. For example, these 5 companies, the dividend they paid last year was 559 billion naira. So if I add dividend, which they paid to Nigerian shareholders, to taxes they paid, so the injection into the economy is quite significant. It's over 1 trillion naira for these 5 companies alone. And then if you now look at what they do, for example, you take Dangote in particular, right? It's let me first of all step back a little bit. These 5 companies account for 68% of total market capitalization. They contribute 302 billion naira of taxes. their profit after tax is 691 billion, and total dividend paid is 559 billion. But unfortunately, direct employment is only about 25,000 people for these 5 companies, 0.04. But that's direct employment. Indirect employment is that if MTN has 60 million subscribers and you're using your phones to settle transactions, your POS, they are creating employment in terms of productivity. Dangote cement is used for affordable housing, for roads, so the indirect impact of the activities of these profitable companies, apart from just employment, shareholders, withholding tax on their dividends and all of that, go a long way to ensuring that the impact is felt and the people feel. And that way they complement the activities of government. And we cannot underestimate that impact in terms of what it does. Because in the end, if people, even if you make money and they're not employed, if they're not employed, they become restless. When they become restless, they become dysfunctional. When they become dysfunctional, then you and I cannot sleep at night because when the poor are hungry, right? The rich, the poor are angry because they are hungry, but the rich are kept awake because the poor cannot sleep.
Okay. Now, we just heard the federal government talking about a supplementary budget and of course, getting 396 billion, for COVID vaccine. And, some people believe that perhaps the private sector have really not done much in that area. Do you think that's a fair criticism? I
don't think so. There's only so much that the private sector can do, and there's so much the government, but it's a joint effort. But let me tell you something. In 2020, in the last 20 years, there has been hardly any supplementary budget. In 2020 alone, we had 3 supplementary budgets because there's kind of there's a tacit cooperation between the legislature and the executive this time. So the price of oil went down, they slashed the budget. The price of oil went up a little bit, increased the budget, and then we had some borrowings and we increased the budget. This year, 400 billion naira for vaccines. We need that. We need the vaccines like yesterday, right? And so, but do we need to have a supplementary budget because of 400 billion? We are in a budget of 13 trillion. I'm not so sure, but just to fulfill all righteousness and decency, the government will do that and go through that. But then the private sector has to play its role. These vaccines are there. I think in all, we've vaccinated less than maybe 500,000 people in 29 days out of the 4 million vaccines. So again, management problems, that's very important to understand.
Yeah, I also want to take you back to that issue of taxation, because I was just thinking, you did mention MTN, companies that pay huge taxes that are listed on the exchange, MTN, Nigeria, Dangote.
Yes.
We didn't get to hear any of the banks, and yet they are posting some stellar profits.
Again, okay, tax. There's what we call taxable income and income. So even if you make income and you make a profit and it's not taxable, then you will not be assessed on that. The first thing is that every investment in treasury bills is not taxable. So if you have a big bank, a tier 1 bank, that has a balance sheet of which 30 to 40% of its assets are in treasury bills, all of the revenue on those treasury bills are not taxable. So even though it makes 200, I think somebody made about 200 billion naira profit, right? But paid tax of only about 5 billion naira. Why? Because all of the revenue from treasury bills is considered tax-free. Not only that, even if they buy treasury bills on your behalf, they will take that revenue as their revenue, and therefore they will get tax exemption on that. So it's a very interesting thing to look at.
All right, before we let you go there, of course, we're talking about AFCFTA, which we have ratified. And which Nigerian companies do you think are, positioned to reap the benefit of the AFCFTA?
Well, first and foremost, those who reap the benefit are those who are positioned ahead, and then those who are responding. So let me put it clearly. UBA is a Nigerian bank with had a UBA Africa strategy before, after, and everything. So you must give it to Tony Elumelu that it was proactive. Then the Dangote Group are in 10 to 14 African countries. Huge investment. Of course, Airpeace, Helen Oyema was here the other day, flying within the region and flying across the continent. So I think it's important to understand that those companies, because they have a source of competitive advantage, are going to be able to benefit from this lower tariff across Africa. Don't forget that Africa has 1.2 billion people. So this is a major, major market. So you are not going to be a Nigerian giant, you're going to be an African giant. Nigeria is the largest economy in sub-Saharan Africa. 25% of, roughly, approximately 25% of total GDP in Africa is Nigerian. One in four Africans is a Nigerian. So I think that it's a very important thing to understand. So again, you know, if I may end up there, I would say that you have the MTN Foundation doing significant amount of work across Africa, right? And especially in Nigeria as well. The Dangote Foundation is doing so much work. IDPs, they're doing things in a business school in the University of Ibadan, Premier University. You have boreholes in Kano. And there's so many things to be done, but that's important. That's giving back to society. So first and foremost, you're making money, you're employing people, you're swapping some of your tax for impactful, tangible assets. Then also, you're actually helping the charities to reach out to people.
Thank you very much, Mr. Ruwane. Always a pleasure talking to you, and happy holiday. This is Good Friday. Happy Good Friday.
Make sure you eat your free John.
We have to get it with a lot of Bitcoin.
Oh, yes.
Okay. Markets are on Easter holiday, but this week, the Treasury bills secondary market turned bullish as the increased liquidity in the system supported participants' appetite for shorter dated Treasury bills, and that saw yield across all instruments decline by 14 basis points to about 5.4%. To limit the excess demand in the Treasury bills market, the CBN simultaneously floated the primary auctions for OMO and Treasury bills the first time in almost 2 years. All right, to talk more about this auction and give us a review of this market in the last quarter and an outlook for the new quarter is the head fixed income at Chapel Hill, Durham, Oladipo Ajayi. Thank you very much, Mr. Ajayi, for joining us on the program.
Yeah, thank you very much for having me on this program this morning.
So what's your analysis of the Treasury bill auction on Wednesday?
Thank you very much. The Treasury bill auction on Wednesday, I think a lot of people were surprised at the result. Some people are thinking maybe there will just be a marginal increase from what we saw in the last auction. But what we saw was that the DMO actually sold more on the long end of the curve on 364-day bill. They sold almost twice what they actually offered. They offered about 68 billion on that instrument, but sold about 138 billion, and actually cleared the instrument at 8% compared to 7% where it closed in the last auction. And that means that the auction closed like about 100 basis points from where he actually closed in the last auction. And on our part, we are actually in alignment with what happened, because knowing fully well what we saw in the last MPC meeting, where we saw more of a dovish stance from the committee, we know clearly that the CBN will likely actually find on another method to actually find a way to actually ameliorate the inflationary pressure that we are currently going through in this country. And one of the ways to go by it is to continually push yield up, and that's one of the ways to actually curb the inflationary pressure. And that's what we saw in the last auction. And also, what we also noticed that particular day was when the NTB was actually going on, the CBN also floated OMO bill for 100 billion across 3 maturity, and those instruments closed at the normal rate of that we are used to of 7%, 8.5 for the medium-term instrument, and also the 10.1 for the long-term instrument that were issued in that window.
21 has ended. The second quarter, how would you describe activities in the fixed income market for the first quarter?
Yeah, for the first quarter, we the market, if you look at the opening and closing, where the quarter closed, we notice more like an aggressive bearish tone in the market. Take for instance, the 3-4-day bill opened around 1%, circa 1% at the beginning of the year, and just like what I mentioned, it closed at 8%. At the end of the quarter. So that tells you that it has moved by about 700 basis points, about 7% from the beginning of the year to today. And if you want to look at the bond space as well, the bond space, the long end of the curve, that is more like the 50-year bond, opened around 8% at the beginning of the year, but closed the quarter around 12%. It tells you that the market was actually very bearish in the first quarter, and we are not so surprised with that, because considering what we saw in January, the inflationary pressure that from January and February also lent credence to the yield upside move in the yield across all instruments in the market in the first quarter. So what we saw in the first quarter is not something that is unexpected.
Or outlook for the second quarter?
For the second quarter, our outlook is we'll see more of our edgy markets in the second quarter, considering that the inflationary pressure is still biting. We still have the FX crisis unsolved, and at the same time, the government is still in the market aggressively borrowing, so we feel that if you look at these three indices, it points toward the fact that the yield will continue to go up, not throughout the second quarter. And at the same time, if you look at the level of liquidity that is maturing into the system in the second quarter, for example, for OMO in the month of February, April, we are expecting about 352 billion. In the month of May, we are expecting about 806 billion, and in the month of June, we are expecting about 310 billion maturing into the system. If you compare to what we've seen in the past year, this is nothing compared to the level of liquidity. And when there's paucity of liquidity in the system, what we tend to see is that we tend to see aggressive sale on the part of banks and other financial institutions that in a bid to actually create liquidity to manage their books.
Now, for you traders on the fixed income market, how are you reading this decision by OPEC? Yeah,
the decision by OPEC is it sounds okay for us, because the action isn't aggressive, and we saw the results of the reaction of market to that. And what that means is that we can also, Nigeria can have ample time to actually restructure their book before the final implementation of the full restoration of the cost. So as we speak for now, it still sounds a good one for us, because we expect oil price to still move up a bit, and that should help the government to actually create a for the reserve, and at the same time create liquidity to actually meet demand in the FX market. And we also feel that it's also a very good avenue for the government to actually tweak the FX framework in a way that it will actually help them to actually resolve the long-standing FX crisis in the markets.
Thank you very much, Oladipo Ajayi, for sharing your holiday with us. Thank you. We do appreciate your time.
You're most welcome.
All right, while other markets are on holiday, the crypto market continues trading. We'll look at how the market is this Good Friday after the break.
And now let's look at the market and never sleep, the crypto market. Ini, Bitcoin hit a high of about 60,000. How's it looking right now?
Well, looking good, even though its dominance has gone down, but of course it went back to 60, which it did some time ago. Well, let's look at the market cap. The market cap is up 5.21% at 1.93 trillion naira. 24-hour volume is went down a bit to 0.23% at 169.64 billion naira. Bitcoin dominance went down, even though the price hit 60%, as Ladi has said there. 2.39%. It lost that percentage of dominance, and the price is now at 59. You know, we say it's a volatile market. We don't have to say it, you see it. So now it's $59,885, up 1.43. And then 24-hour volume of Bitcoin is 63.437 billion naira. Price of Ethereum is up. Ethereum has been doing good this couple of days. It's gone beyond that height it had in February. So now this is a new height, over $2,000. So if you have Ethereum, you're a rich guy now, you know. So 24 hours volume is $32.87 billion. Top alts by market cap: BNB, Cadazo, $1.20, up. All of them are up. All the altcoins, you know, when Bitcoin's dominance goes down, then the altcoins will be doing very well. XRP, everything 1.66%, 2.76%. And the top gainers there, we have Helium, Binance, Coin, Stellar, Lumens. Everything has gone up. Yeah. So it's a good
It's
good
looking
holiday.
quite green. I guess
Yes.
it's a good Friday. A good
Well,
Friday
Good
in
Friday
the crypto
is-
market.
Talking about Bitcoin dominance
Yeah.
coming down, you know, one question that comes to my head, you know, there's this coin that I have been tracking.
Yeah.
Remember when you talked about the ZRX?
Chimmy,
Yeah.
I'm suspecting you. Why are you tracking that particular coin?
Yes, I want
Chimmy
to
is
know.
very much
All right, Edie, I guess
Let's,
Olumide is ready to talk to
Okay,
you
all
now.
right.
Please
Hello,
find
Olumide.
out what this Bitcoin dominance coming down will mean for a coin like ZRX.
Good morning, Olumide. Happy holidays to you.
Yeah, same to you. Happy
Yeah.
Friday. Yeah.
Thank you. Thank you for joining us. Well, we see dominance of Bitcoin going down, even though the price is going up. Could you explain to us what's happening there?
What really is happening around that area is the fact that other altcoins are going up. Don't forget that the Bitcoin market is one of the pioneer crypto assets, and over years has developed faster than many of these altcoins. But we are now seeing that altcoins in recent times are gaining record. I look at the first 20, apart from Bitcoin, has over returns of over 5,000%. So we are seeing that the dominance of Bitcoin is going a bit lower. You know, the price, like we said, is hitting record that is trading about $60,000. And that is also tell you that the price is almost consolidating. And other altcoins still show a lot of upside. The fact that they are undervalued, they still have room for growth.
So it's the movement of the altcoins has reduced the dominance at this time.
Yeah, exactly, yeah.
But a lot of activities are going on around Bitcoin and digital currency and all that. What's your outlook in this holiday? What's your outlook for Bitcoin?
My outlook for Bitcoin this holiday seems to be bullish because if you recall, a few hours ago, the world's most valuable crypto exchange, I'm talking about Coinbase, announced that they will be offering direct listing process on the NASDAQ.
Yes.
This time, and that is really very bullish because this is one of the pioneer crypto exchanges that started about 2012 and has grown to be a multi-billion-dollar company. In fact, the last valuation put it about $90 billion, and that just tells you the fact that investors are seeing so much growth. And looking at its last earning results, show that it's already profitable and also offers a lot of product services. So I think investors now have other options of getting exposed to the crypto market, and I think that's a good one. So I'm bullish, but I think listeners need to understand that the price at where it is looking like suffering exhaustion because, like we said, it's already hitting its record high, and we saw that anytime Bitcoin gets to 60, it pulls back a bit. So that just tells you that that's a strong resistance position. So if it breaks above 60, we'll be looking at 65. But if it can break at that point...
I thought we're looking at 100.
Yeah, I'm talking about midterm. I'm talking about weeks here. You know,
Okay.
I'm not looking at the holistic here, but you know, a lot of people, like including Bloomberg, will tell you that the forecast for Bitcoin in the next 2-3 years is about $100,000, like you say. But I still think that a lot of things need to be done for that to really actualize. You know, regulation, the fact that a lot of investors are still on the sidelines. You know, this market is still growing. It's just a decade old, and you know, it's a $2 trillion market. But you can't compare with other markets that have much more market size than it. So I think listeners should be aware that a lot of volatility, price action moves will still take on, and then rampant price action moves will still take on. So I think for me, I'm bullish in the long run, but I expect a lot of pullbacks in the near time. You know.
Okay. Oh, okay. I just wanted to know how you think this will also affect the altcoins that are also on Coinbase. Will it also bring a bullish sentiment in their trade?
Yes, I think that's natural. In fact, the historicals have often showed that anytime Coinbase lists an altcoin, the altcoin usually rally. You know, Coinbase is like the Wall Street of crypto markets, and you see, Coinbase has a very strong compliance network. So usually before Coinbase lists an altcoin, they must have done their due diligence, and that's why you often see most of the coins listed on Coinbase making the top 100 in terms of liquidity, market cap, and the volume, trading volume. So I think, yeah, that's a bullish sentiment for many altcoins that are already listed. Although, you know, some months ago, XRP was delisted from Coinbase because of the legal issue on the fact that XRP is a security or not. But I think now that the case is being settled, XRP should come back, and just watch for XRP. Once XRP gets back to Coinbase, you see an upside. Yeah.
All right, Olumide, thank you so much for sharing your holiday with us. We really appreciate it. Well, Olumide Adesina is a financial and investment market analyst, and he just shared his thoughts with us. But of course, we always say this is not a financial advice, so please.
So I guess 60K is the resistance to beat at this point.
Absolutely. But my concern is what's the impact to have on other smaller coins.
Yeah, he said it to be bullish also.
It's quite a bullish sentiment for coins that
bullish
are actually listed on Coinbase.
And now that you have the Coinbase now listing on NASDAQ,
are
we likely to see some other exchanges like Binance?
Possible,
perhaps.
but the CEO of Binance has said he doesn't really have any plans for that, but we'll keep watching.
I am sure in futures, a lot of them will possibly...
It could come up,
All right. That's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago, and happy holiday.
And I'm Ladi Williams.
And I'm Ini John McQuarrie. Enjoy your holiday.